Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB. I'm Nadine Blaney.
I'm Juliette Sally.
And we're here together with you for the first time in 2026. So if you're watching or listening, Happy New Year if you haven't heard it from us already.
And apparently today's the last day you're allowed to say Happy New Year.
Is it?
Until, I guess Chinese New Year. But that's what they say.
I'll take it off all my emails as of now.
Well, of course, we thought we'd have a good day,
Yeah.
Nadine. The Dow hit a record overnight. We're on this positive momentum. I loved your chat with Nathan on the call yesterday where he's saying he's really into 2026. He thinks this is going to be a great year. But it's always the big miners or the banks that drag us, and today it was the banks, wasn't it? So really that happened around 11 a.m.
If it weren't for the commodities, so materials and energy, it would have been even worse. I mean, 8 out of the 11 sectors are lower. Materials, the best performing, up close to 2%, let's call it that. But, I mean, the banks absolutely getting hammered. CBA currently down by 2.7%, NAB off by 2, ANZ more than 2, Westpac 2.5 plus. So, yeah, it's sort of the miners, energy versus everything else.
Absolutely. So that really does take us to our themes of the day, which is banks bust, being led, of course, by index leader CBA. And for the steel, great title there on this Bluescope Steel bid, $13 billion they're weighing up.
$13 billion. And I was just talking with Nick Sprouts from Harvest Lane Asset Management. So they, capture the risk premia in these M&A transactions. That's their style of investing. And he was saying the price action today tells us that there should be another bid forthcoming. So the board is in conversation with obviously SGH and the other Steel Dynamics, I think it's called, in the US. And so, yeah, possibly an improved bid.
And this is about the third time US Steel Dynamics has made a play for Bluescope in the last 18 months or so as well. But at least this time, Bluescope has said that they are, chatting with them. They are open to reviewing it. And that was something like a 23% premium to yesterday's closing price, shares up by about a similar amount today.
Yeah, and so SGH obviously is the local impact on the listed impact, I suppose, as well. So we'll take a look at that. Also, we are expecting an inflation report out tomorrow. So it's the monthly one tomorrow, correct me if I'm wrong.
Yep.
We get the quarterly one later in the month. And I was chatting with Matt Richardson from Manuva, and all of these interviews, by the way, you can find online to get caught up. But he was saying, these two inflation rates are so important when it comes to whether or not we'll get that February hike coming through.
Yeah, and everyone, of course, saying that is going to be live. Citi's already called that they think the RBA will hike. I was talking to Paul Bloxham from HSBC earlier today. He says, look, definitely a live meeting. All right, let's get into some of the sectoral moves today as well. When we look at those miners that did have a good day, Rio continuing to add to those record highs.
Yeah, up by close to 1.9%, $152.27. BHP up as well. Really good gains, not only there, but in the lithium space as well. So Liontown and PLS amongst the best performers by percentage terms. Of course, we look at BHP by market cap. It was the biggest performer, but in percentage terms, some of those lithium miners doing well.
And speaking of market cap, it was all about CBA, and I can see the big weighing on your screen there of CBA's drag of about 2.8%. And all the big four tumbled quite significantly today, though. Macquarie, the outlier, up by 1.7%.
Consumer staples were lower, but also consumer discretionary stocks as well. Check out Lovisa. That's a pretty punchy fall for Lovisa, and I'm just going to take a little look-see. Yeah, there was no news, but perhaps this is just the concern being expressed about rising interest rates, and maybe we'll be getting some sales updates coming through in the wake of, what do we say, Black Friday, Cyber Monday, and the Christmas Boxing Day sales.
I mean, it'll be no surprise to you, Nadine, that I went shopping over the break.
I noticed your new shoes today.
It was interesting in the shops because, normally there's so much discounting going on, but there was discounting on top of discounting. So you think about how you might have a sale price and then you get, a $10 voucher or something like that. And I was saying, you're allowed to put this voucher on top of this already discounted price, the EDMs, the emails that are coming through those retailers are doing everything they can. It's working on me. Is it working on you? But they're certainly trying to push things out the door. And yes, my new sneakers cost $35.
Really?
Thank you very much.
Oh, I like them.
Yes. Let's get to some of the other stories. We talked about Bluescope Steel. They're weighing up that $13 billion takeover offer. Shares up 20%, $29.48.
Yeah, it's punchy. Monadelphous, that was the stock of the day today, so we'll get you across the analysis in just a tick. It's been awarded a major construction contract with BHP at Port Hedland in WA, higher, adding to last year's gains.
IAG says it successfully integrated RACQ into its main catastrophe cover. Shares just slightly higher today.
Yeah, and Life 360. So this is not so far, from what I've seen, been very much of a friendly market for growth companies to start the year. It says it surpassed more than 50 million monthly active users in the US, but shares still down by 3%.
And Silex Systems plunging by 34%. This is after it failed to secure a $900 million contract.
Yeah, that was a big one. It was, you've got to be in the market watching it every day. It was one of the best performers yesterday, I guess, in anticipation of this Energy Department report, but, clearly not to be. Let's start big picture, though, because obviously that is dominating the conversation as well. We haven't yet mentioned Venezuela. Clifford Bennett from Propex 24. I'm sorry, I do that every time, Clifford. I don't know what's wrong with me.
I know, it's really entertaining.
Okay, so let's start with Venezuela. Is this a one-off, or has this sort of whole world order changed?
I think it triggers a gloves-off approach from all major powers around the world, and even within the continent of Africa. There's going to be African nations that feel now if the US can do that to Venezuela, they could perhaps push across a border to get that, lucrative lithium mine that isn't so far away. It really is cut out of the box stuff in terms of geopolitical tensions. It means also that the background pressures that were already in play in conflicts such as Ukraine and perhaps even in Gaza regarding gas supplies, that a lot of these conflicts do have an element of seizing resources to them, securing long-term resource supply. And certainly that has been the foreign policy of China, of Russia, the United States, and European nations for some time. And that now moves into a higher gear where people are going to realize if they don't move first, maybe someone else will. And so I think we've just entered, we're already in it, but now it's quite clear we are in an era of resource wars, resource-motivated conflicts. And I don't see that temperature falling away after this event. I see it continually rising around the world. That doesn't mean we're going to have major conflict after major conflict, but it just means, unfortunately, sadly, we probably are going to have more conflicts in regards to the resources space. And so that's the long-term global impact of Venezuela that perhaps not a lot of people are picking up. And it explains why the price of oil has risen, even though the movement into Venezuela by US oil companies will mean greater oil supply within 12 months, global oil supply. It also shows that people are going to be concerned about, does this mean the peace deal will go ahead in Ukraine, because Russia's very upset about this, and if not, then does that mean there's not going to be the return to Russian oil supply that some had hoped for? So it's a very difficult environment at the moment, and I think in the Australian equity market today we saw price action that reflected that as well. We saw, I think, and it's just my opinion, but the pricing in of recession risks, because the RBA shouldn't be raising rates, it's nonsense, and the private sector economy is already struggling a little, it's at least flat, and therefore a rate rise is risking a private sector recession, not a headline GDP one. And so that's why you've seen consumer discretionary stocks weaken, while the miners and banks weaken, while the miners have had a very strong day, because everyone is going to be looking to that resource space. And I think the process hasn't even begun yet in terms of the buying of metals and the buying of mining stocks globally. I think it's going to be a big theme 26, 27, 28, 29, and something to be a part of, most definitely.
So, Clifford, then it brings us to what you're seeing in terms of risk premium for currencies as well. And you mentioned there that you don't think the RBA should be raising rates. I was speaking to Mark Todd from HSBC earlier. He is of agreement with you and thinks that that would just send the Aussie even higher. But you're saying that this is all flowing through to greenback weakness, the US dollar, a snowflake on the sun.
Well, yes, I like that little quaint term of phrase. But I had until now been saying that the US dollar and the Australian dollar are in a race to the bottom, but the yen would beat them both, right? Because the Japanese want a lower yen to offset the US tariffs. That's the game they're playing. They want a dollar yen at 185. I've traded in my career dollar yen at 250, 255. So going to 185 is a plausible number for dollar yen. That's where the Japanese want it. That's US dollar weakness. Also, you have BRICS now totally spooked by these Venezuelan events, and they're going to accelerate what they were already doing, which is selling down their US treasuries and bringing money back home or to each other's bond markets, or the buying of gold, which has been very significant. So I think a weaker US dollar is very much on the cards. Fiscal largesse, no, not even the slightest glimmer of hope or light on the horizon that is ever going to turn around. And so therefore the printing of money will continue to value the US dollar. It's already fallen 15% against the euro over the last year, and the euro had a war on its doorstep. So that's how weak the US dollar is. If the US, that's the euro chart there, it's just had that moment of buying due to the Venezuelan geopolitical tension rise. That buying, euro weakness, has been immediately rejected. The euro's looking stronger. A lot of currencies are looking stronger against the US dollar. Now let's bring the Australian dollar into that whole scenario geopolitical mix that I've just mentioned on your show. And it's clear to see that a nation that is resource rich, such as Australia, is going to do very well as a currency against a weakening US dollar over the coming year. So the Australian dollar, I mean, I was the first, I remember when it was under 80 cents before it went to parity, and I forecast parity at around 78.50, and every other bank in town said, oh, everyone knows the Australian dollar will never get above 80 cents again. I said 3 to 4 years it'll be at parity, and it was. Again, there is risk that the Australian dollar is going to 80 cents, 90 cents, parity 1.05. That's not good for the miners. So we don't really want currency appreciation. But if the US dollar is having a long-term historic repricing lower, which I believe it will, and the bond market as well, you'll see higher US bond yields and a weakening US dollar, because they're functions of the same process, which is an exit from the US bond market. The Australian dollar could well be headed towards 78, 80, 82 cents this year, and maybe parity over the next 3 to 4 years. If I'm correct, and obviously I would think I am, but if I am correct that we're going to have heightened resource pressures building around the world, then the Australian, and a weakening US dollar, the Australian dollar is extremely cheap here. And remember, until a few days ago, I was an Australian dollar bear, but everything has shifted by this Venezuelan move.
So what are you trading now, Clifford?
I'm long gold, buying oil. I am short US equities, actually. I think the equities market is a little bit iffy here, but I'm not sure if that's long term, but just for the moment. I'm very much selling US bonds, selling US dollars, and buying gold and the Australian dollar, and I'm looking at Australian miners as well.
Got it.
All right, Clifford, thank you. Happy New
Thank
Year
you for
again.
having me on your show.
Hopefully
We'll see you soon.
Stock of the day, you were on the call.
Yeah, it was Monadelphous. I was on the call with Andrew Coleman from Team Invest and Mark Gardner from MPC Markets. Here's what they had to say.
And where we're having issues with, a lot of these commodities running is supply gaps, and the engineers are not going to get work if the mine's miles away from from being, if they're in that sort of early exploring or early development phase. So look, iron ore's been pretty subdued in the last year, and they do have a big portion in iron ore, engineering and infrastructure and services, etc. So there could be a bit of uptick there, but look, I would say if you've got it, you would continue to hold it.
The question you've got to ask is, will Monadelphous almost certainly be larger in 5 or 10 years? Absolutely. but is paying a PE of 32 times for a mining services company that cannot control the price of the underlying commodity a reasonable price? Absolutely not. And from that point of view, I'll put it in the hold because it's too good a company to say sell, but honestly, from here, the odds are gravity will reassert itself.
All right, let's have a look at the leaders and laggards. We know Bluescope Steel is up there, but also, Nadine, really interesting, of course, this movement again into defensive players amidst what's happening geopolitically. So Drone Shield up 18%, Austal up by almost 9%, and then, of course, those lithium players getting some love too.
Yeah, it's an interesting day out there, I think. Silex, we already said why it is down by close to 34%. Levisa, Judo, Guzman and Gomez, APA Group, Temple and Webster, all significantly lower. Temple and, I don't see any news. Silex is a different story, but all of the rest on that list, I'm not sure why, but
I think
clearly.
it's always such low volumes here during this period too, right? So you see massive swings like that. 3.5% is quite big. Let's have a look at the small end of town. Austral Resources up 25%. Hot chili, I just like saying that, so it's up 14.4%.
Let's see if there's anything I like saying on the next page. And Calyx.
There you go.
Yeah, there you go. Down by 12.5%, but it was up significantly yesterday. Island Pharma, it's still working through some issues with the FDA, down by 10% to 41 cents per share. So that's the small end of the market.
Still pretty quiet out there, isn't it? So many people on holidays. CPI and PMIs from the Eurozone tonight.
Tomorrow here, it picks up a bit. We get building approvals for November. We're being told that permits could lift by 2%, and we get the monthly inflation data. Headline inflation could ease to 3.6%, but if there's, 3.6%, that's still way out of the RBA's target band, but yeah, it's the market will be quite sensitive to this inflation read, given, our expectations for interest rates going forward. So watch out for a bit of Aussie dollar, just talking about that with Clifford Bennett. Volatility around 11:30, but we'll bring you that data when we're live.
Yeah, and I'm going to be speaking to Prashant New-Naha from TD Securities about 10 minutes or so after that data is released. All right, so we finished down by about 0.6%. The ASX 200, I think, has done a similar loss, or 0.5%. So crossing now below, Nadine, its 50-day moving average.
Oh, okay. So that's some technical price action. No doubt we'll get some analysis on tomorrow. So that is my daily reminder that we will be on live from 9:45 a.m. and we look forward to joining you then.
And of course, you can catch up on ausbiz.com.au. We'll see you tomorrow.
Have a good night.